Welcome to the Benefits of Knowledge podcast with Lorne Curry of Curry Financial Group Limited. In this podcast, we are focused on helping businesses set up and manage their group benefit plan to protect and assist their most valuable assets. Join us on this journey where Lorne explores ways to help you develop effective and cost-efficient strategies for your business. Now, on to the show.
Hello and welcome to the Benefits of Knowledge with Lorne Curry. Today, Lorne has given me the honor of introducing our guest and reading his short bio. It sounds so far so good. It sounds pretty amazing. And his guest today is Dave Patriarche. Dave is the founder of Canadian Group Insurance Brokers, also known as CGIB, an association dedicated to the education and support of advisors that specialize in employee benefits. In 2003, Dave saw the need for more specific technical training geared toward the complexities of group insurance and started monthly breakfast networking events that brought advisors together to support each other and their clients. The support grew with the addition of seminars, HR resources, and a Slack networking channel that provides CGIB members with access to over 5,000 years of an industry experience. Over 5,000 years, Lorne, that's a long time.
That tells you, Eric, that all us guys in the group benefit business are getting old. But Dave has a lot of members, so maybe we're not as old as I thought.
Yeah.
We are.
All right. So what are you guys talking about today, Lorne?
Okay, so we brought Dave in because he and our friends at BBD have come up with a new hybrid insurance plan. So this is... not everybody can sell this, and so I wanted to bring Dave in to really get some answers for our listeners of how this is going to work. It just started to be available the 1st of September, 2021, obviously. That's the reason I brought Dave in today.
Fantastic. Well, I'm eager to learn all about it.
Right. So I thought, just for our listeners to get a bit of background, first of all, Dave, welcome to the podcast. Glad you were able to join us.
Thank you very much for having me. It's great to be here.
All right. So a little background. I met Dave quite a few years ago. I can't even remember how many it's been, but I was attending a Benefits Genius, which was a coaching program for group benefit advisors, and Dave was one of the guest speakers there. So, I don't know, Dave, do you have any idea how many years ago that was?
No, it's funny. I was just thinking as you're asking, I don't know, 5 or 6 years ago anyway, I think. But it's been a little while.
Yeah.
Maybe
I
longer.
figure if I think it's 5, it's probably 7 or 8. But anyway, it's been a while. So.
Everything's different since COVID when it comes to time.
Exactly. Yeah. So, and I have a few things to thank Dave for. Dave actually talked my wife into going sailing on Dave's boat. For anybody that doesn't or hasn't heard of Dave, Dave is a great sailor all over the world. Maybe, Dave, you could share a couple of those, how far you've been. But Dave has a boat down on Lake Ontario, and we had never been sailing. Took us out for a lovely Friday sail, and it was actually just gorgeous out there. I really enjoyed it.
Yeah, it was a beautiful day. I've sailed, since I was about 11 years old, and I've crossed the Atlantic and done some of the heavy weather sails from Canada down to the Caribbean nonstop, and lots of local sailing, and all over the world, Caribbean, Mediterranean, you name it. And so every Wednesday and Friday we take out friends and guests out sailing on Lake Ontario just to have that experience. And you guys were fantastic, and I think we were blessed with great weather that day too.
Yes, we were. It was gorgeous, and I guess really Jeanette and I got lucky because we were the only two with you that day. So it was we had a great day. So we appreciate that.
Likewise.
Yeah. Then we went from there. Dave also has, I don't know how many you've done, Dave, but live music in his backyard. So a backyard concert. We went up to Dave's place, and it was like the day or maybe 2 days after I had knee surgery. And so I get to Dave's place, walk in the backyard, and Dave's got 2 lounge chairs sitting there saying reserved, so that I have a nice seat right up where I could see and hear real well, and didn't have to walk very far with my crutches. So
hey, you're a trooper being there. So I mean, I couldn't even believe that you made it. So that was fantastic. And we've done about half a dozen of those over the years, and we're moving to a new place hopefully this winter, and we'll continue the tradition and do more backyard concerts to highlight great local talent that doesn't always get noticed. Yeah.
Right. It's a great idea, and it was a great evening. So, we really enjoyed that.
Well, thanks.
So,
thanks for being a part of it.
Yeah. So that's just a little background of how I've known Dave for a few years. And today, really, again, we're here to talk about this new program. And Dave, as the head of CGIB, and our friends over at BBD, Benefits by Design. We had Mike McClanahan on a couple of shows ago, and you guys have put together this new offering. So I guess the first question would be, why do you think employers need this new pooled or hybrid plan, and why did you have feel the need to create it?
Yeah, so the history started, I guess, about close to 30 years ago. And there was a similar product long before I got in the business, or a couple of years before I got in the business. And it was a hybrid plan that was kind of unique, but it didn't work out. It was a little bit too early in the Canadian market. And so around 2000, we started redeveloping the product, but we could never quite get it to be what we wanted. And what we needed was a fully pooled, transparent pool to protect clients, and especially small and mid-sized businesses, the areas that you tend to work in that 90% of businesses are. The biggest problem is not the cost of benefits necessarily, it's the stability or lack of stability of the rates. So what we were looking for was a pooled product which would protect small companies, employers, when they got one of those big claims. So they wouldn't be seeing 30 or 40% rate increases and these big volatility in rates that makes it hard to sustain plans. And so we approached BBD many years ago and said, would you consider this? And at the time the product was still kind of building, and it was experience rated, which meant it was the rates were based on what your claims were, so it tended to still have a bit of volatility. And after a lot of suggestions or maybe complaints, depending on how you read into it, the guys at BBD said, let's give this a try, and said, let's create a fully pooled, transparent hybrid plan based on their old Ben account model. And as you said, it's just for CGIB members, of which obviously you're one. So it's a little bit close-knit community that can sell it. That's kind of how we got to and why. It was all about protecting the employers. That's it.
Okay, so that's great, and I think it's a really good idea that it's only available through CGIB members, me being one of those, so that's great news for me. So you talked about the pooling protecting clients. So maybe can you explain to our listeners how the pooling protects clients, and how does that actually compare to a traditional plan?
Yeah, and that's probably the best way to look at it. As most traditional insurance plans, your typical 80% drug coverage, for example, if you have a high-cost claim, like a biologic that could be from $17,000 to $35,000 a year, and you're a small company, one of your employees has one of those claims, that is used to set your rates for the coming year. Kind of like having a few car accidents put your rates up. Well, having some catastrophic drug claims does the same. And generally, talking small, mid-sized group, maybe up to 100 employees or so, there's a thing called a stop-loss attachment point of $10,000. And what that means is the first $10,000 of the claim directly affects your rates, and the amounts beyond the $10,000 are reinsured, which helps to protect the employer. But the protection doesn't kick in till that $10,000. So by having this plan kick in at $1,000, it kind of gives you a lot more stability in that pool. So if you have somebody that has a big claim, it's not going to have any effect on your rates whatsoever. Now, I got to be clear here. This is for things that happen in the future, not things that are already happening. So I don't want everybody calling and saying, hey, I've got somebody who has a Solaris claim that's like $560,000 a year. We want to dump that into your pool. That's not the intent. We're not trying to insure cars after the accident, barns while they're burning, or people after they're dead, or drug claims after they've gone through the roof. The whole idea is to protect from the unexpected and provide a real level insurance going forward.
Which is really the whole premise behind insurance, right?
100%, yeah. To cover the things that you can't plan for or budget for reasonably that are unexpected and uncommon, basically.
Okay. So this is unique and everything else. So I guess one of the questions people might have would be, why are there not more pool plans like this? Why is nobody else doing this?
That's a great question. And there's days where I ask myself, am I crazy to try this? But the reason is, having experience-rated plans helps the insurance companies and protects them. That's not the business that you're in. Your job is to protect the employer. We want the insurance company to be in business and make money and all that. But what happens with experience-rated and traditional plans is, if you have high claims, your rates go up a lot. And what you'll then end up doing quite often is doing things like putting in a drug cap, reducing coverage, or even canceling the plan if it's too large an increase. And all those things accomplish the same thing to the insurance company. They remove the claim. So it's now not the insurance company's problem. Now it's the employee's problem. And again, by trying to protect the employer and the employee, we don't really want that to happen. We want to make sure that the employer is whole and the employee is whole through the whole process.
Right. So I'm just kind of looking back here. We had a previous podcast, I think it was, podcast number 12, where we talked about controlling drug claims, and we did go through all those scenarios. We have the stop loss, then beyond that you've got having drug caps would be your most aggressive move, and then in between there are some other formulary things. So we had those conversations.
Yeah, and each one of those is unique for its own reasons. So like the formulary one, if you already have a pre-existing high-cost claim you're trying to remove but still have coverage for the employees, then a formulary can solve that problem quite well. And there's some unique products out there that not every advisor knows about. So the fact that you've talked about it and realized them, that puts you in the top tier of benefit advisors in the province, if not the country.
Great. Well, that's great to hear.
Pretty cool.
Yeah. So it's, and again, in that episode, that's exactly every situation is different. And that's why I'm a big believer in being a specialist in group benefits or whichever line of work that you choose to do. Right?
100%. I think it's underrated, but knowing that 50% of group insurance policies sold in Canada each year are sold by people that only sell one or less a year is kind of a scary statistic. It means most group insurance plans are sold by people who specialize or do most of their work in maybe life insurance, living benefits, investments, financial planning, and they just throw in a group plan, and that's not a good thing. I think specializing in whatever area it is that you like to do and you're good at is really important, and the fact that you specialize in group insurance is huge to adding more value to your clients and being able to protect them better.
Right, and I think that would probably go for a lot of the CGIB members, right? Like, you would know that better than me, but.
Yeah, we still have some generalists, obviously, that still do, and there's nothing wrong with that are also doing pension, life and living benefits. In some cases, that it might be somebody else in their office that does it. In some cases, the people are kind of more generalists and trying to do a little bit of everything. And I don't think that's a bad thing. It's just it's hard to be a real industry leader if you're trying to be good at everything. You really do have to kind of pin it down to something that you can concentrate on.
Yeah, I know I've been, as listeners probably know, I've been doing this for over 25 years. I started out as a generalist, and frankly, it took a long time for me to be able to build a business in group where I didn't have to do the other stuff. Right? It's about that making a living. So there's some of those people, and you would think maybe the ones that have become members of CGIB are working towards that same thing. But I know it takes time. So. Yeah, in my situation.
Yeah, no, in everybody's. I mean, it's you kind of suffer as you build the business, but long term, if you do a great job, good value add to your clients, they hang around, they grow, they refer a business, and your block grows and grows and grows. So it is a great business long term, but it is tough the first years for sure.
Right. So going back to our main topic about the new plan, so you had mentioned, and actually I talked about it at the start, you picked BBD over any other insurers or third-party administrators, so TPAs as we call them in the industry. Why BBD?
Yeah, so it's interesting. asked about this program for years, doing a hybrid plan with a high deductible and using health spending account. And most other insurance companies actually can't do it. It whether it's by choice or technical shortfall, the systems to handle double adjudication are a little bit complex, and a lot of insurers are not interested in adjudicating claims that they're not getting paid for, and that's what happens with high deductible plans. By that I mean the insurance company is accepting the claim, declining it, and then paying from the health spending account. So they get the payment on the health spending account, but not on the decline. And it's all automated, so that cost is quite small, but it's still a bit of an issue. And many of the insurance companies have old legacy systems that are hard-coded and actually can't offer the high deductibles we're looking at. So many of them are limited to $250 or $500 deductibles, and to make this work, you got to be about $1,000 or so. So BBD had the kind of unique administrative skill to do it. They use green shields behind them to adjudicate their health and dental claims, and they're very, very flexible. So it just made a logical choice, and they had a product already that was there. We just needed to tweak it a little bit, and that's what we've done with the CGIB CHIP program.
Right. So just to kind of clarify, so we talk about high deductibles and stuff. So maybe you can just kind of, in a broad stroke, say, okay, what's the first $1,000? Yeah, what's it look like? Yeah. This is the first $1,000. Then what happens with healthcare claims? What happens with dental claims, etc.?
Yep. So again, kind of like you said earlier, there's different solutions for different employers. So in a typical use of this plan, there'd be the normal life insurance, whether that's like a flat amount like $25,000, $50,000, or $100,000. You'd have your long-term disability. You'd have this catastrophic CHIP plan, and you have a health spending account down below. The CHIP plan basically has a $1,000 deductible on drugs and major medical, and no limit, 100% coverage. So what happens is when you put this coverage in, we call it catastrophic coverage, but $1,000 isn't quite catastrophic anymore. Right. Now we see claims, up in the hundreds of thousands of dollars, so we kind of readjust a bit. But What happens is you then build your plan, you got your life, your disability, your catastrophic, and then each employee gets a health spending account. And that could range anywhere from, $500 to $5,000 probably is the typical range. Most plans are $1,000, $2,000. This is not an add-on health spending account. This is kind of you're paying everything from this. And so things like vision, dental, and day-to-day drugs, paramedicals like chiropractors, massage, all come out of the health spending account rather than the insurance program. So the employees have great flexibility. So how does this work from a kind of a dollars and cents standpoint? So if you had somebody who had a high cost drug claim of say $36,000 a year, which is very common, then what on a traditional plan, the employee would pay quite often, say 20% co-insurance. So they would pay $7,200 would be their out-of-pocket amount. The plan would pay the rest, and when it got to renewal time, the employer would see the high-cost claim driving their rates, and that would show up on next year's renewal. With this plan, if you have that same $36,000 claim, the first $1,000 deductible is paid for by the employee. Now, they could pay it out of pocket, or they could pay it out of their health spending account, and then everything above that is insured. So let's just say the person chose to pay out of their pocket. They'd pay $1,000, and $35,000 of it would be covered by the pool, and that would be protected and would have no effect on your rates next year. So what we then have is people go, well, I don't want to pay the first $1,000, but on a traditional plan, you would have paid $7,200. Right. So it's a great saving for the employee, and because of that protection and the pooling, it's a great benefit to the employer as well. So it takes a little bit to wrap your head around it as to kind of where claims go and what the effect is going to be. But at the end of the day, we're all about protecting the employer. So we're trying to avoid that volatility of a big increase, just after a new claim starts that's higher. So regular day-to-day claims go to the health spending account. Catastrophic stuff goes to the catastrophic coverage, which is what, like you said, insurance is all about.
Exactly. It's share the risk. That's how insurance was started in the very first place, right?
Exactly. Yeah. We are to give insurance companies a little bit of credit, I guess. We are in a unique time. So things like life and disability claims and out-of-country travel claims are insurable items, and they are high risk, and they also tend to be non-repeating. I mean, you don't die more than once. You tend not to have an out-of-country claim more than once. You could be redisabled, but I mean, it's not a high risk.
Right.
But now with drugs, many of these drugs are repeating and lifelong. So as long as the employee is there, as long as the plan is there, they're going to keep using that drug over and over again. Not always. There are short-term ones that are acute drugs for chemotherapy and like hepatitis C, but majority of them are long-term. So we are kind of asking a lot from the insurance companies, because these aren't a once in a lifetime $35,000 claim for drugs maybe, but a $35,000 a year, which could be for the next 30 years an employee works there.
Right.
So different kind of situation than most people are used to.
Great. Okay, that's great explanation. Hopefully people understand all that. Obviously, if they don't, we're always here for them to come back and ask some more questions, right? So
yeah, absolutely. And you've got some great tools that you can show, how it models if you're, single or family, if you have spousal coverage, coordination of benefits. You've got access to that stuff to share with your clients to help them kind of understand, because it is a little bit different way of looking at things. Right.
Okay, so you talk about these high dollar claims, whether it's 35,000 or 100,000. They just, I think we've had one over $2 million now even. So,
yeah.
Are there really that many of these claims over $10,000, Dave?
Yeah, so it's funny because a lot of people say, I don't know anybody, and I would challenge, yeah, you do. They're becoming more and more common all the time. Real life, I think according to numbers, like number of claims, not dollars, they make up about 2 or 3% of claims. So it's not an everyday kind of thing. The problem is cost-wise, they make up about 40% of the cost of claims. So they're not happening every day. But if you're, a 25 employee company, odds are you're going to see one of those claims. And, if you're a 10 life company or a 10 employee company, you might not see it this year, might not see it next year, but in the next years, if you have regular staff and turnover and things like that, you're going to see one of those claims. And the time to fix it is before you have the claim, not after you've had the claim and you're trying to kind of scramble. And I know you have great solutions for that too, but I think a properly set up plan to protect the employer up front kind of avoids that hassle down the road.
Yes, yeah. And so we have about 100 companies that we look after here at Curry Financial Group, and I can tell you we do get multiple claims of these high dollar drug claims or whatever every year. You know what I mean?
Yeah.
Somewhere, I think somebody had told me they expect one for every 100 employees. So
yeah, I'd say it's
sure if that's accurate.
Because we used to use that number for disability and for drugs. So you'd expect one disability in 100, and you expect one catastrophic claim. It's higher than that now. It's unfortunately. It just, it's happening more and more, and you don't see it coming. The big mistake a lot of people think is these are only old people that are on these high cost drugs. That's absolutely false. Most of the biologics keep you at work, and you quite often will kick into them, start using them when you're 30, 35, 40. It's not a 60 plus kind of issue. And a lot of people will go, oh, well, these people must be really ill. No, because of these amazing drugs, which are so high cost, you'd never know that they had any health issues at all. So it's actually keeping them actively at work, avoiding disability, avoiding lost time by using these drugs. So they're pretty cool what they can do now.
Actually, the last one that we had here was a young lady in her early 30s. And you talk to her or whatever, you'd never know. But she needed this medication. It was very, very crucial in her situation, right? But with them, hey, she works. She has a normal life. It's great stuff.
100%, yeah.
Right. So we're getting on in time here. We don't want to take everybody's whole day up, but can you talk a little bit about just how's the product unique? So I guess most of it you've talked about the pooling and stuff, but maybe you can explain why it's just available to CGIB members. I think that's probably the main thing.
Yeah, and so there's kind of two parts to that. Why it's unique, we talked about the fully pooled part of it, but it's also transparent. So in the past, with traditional plans, you would know you had high-cost claims. You would know that they went into the pool and that they were being paid for by the insurer, but you have no idea how that pool performs. So you don't know if the insurance company is making tons of money on it, if they're losing money on it. We just, there's no transparency at all. And so as a result, it's really hard to figure out what the right price is if you don't really know what the situation is. So the transparency of this is the CGIB members that sell it will get a report on the pool as to what was paid in premium into the pool in the year, what was paid back in claims, and everybody gets a unified renewal. So if it turns out that inflation and the claims that go in for a year need 1.5% increase, then everybody gets 1.5. Not one person gets 100% increase, somebody gets a 10% decrease. We just kind of pool it all for insurance. So that's number one. Number two, why it's unique and why we're doing it with CGIB members is because in doing so, one, you hit it earlier, we're dealing with more group specialists and benefit specialists that understand the unique nature of the plan, but also they, we hope, are better at field underwriting. And field underwriting is a bit of a lost talent. What field underwriting means is you, the advisor, know your client better than any insurance company does. You have a relationship, you've had a conversation. It might just be one or two, but the insurance company's never had a conversation, so they don't know the situation. And that gives you, Lauren, the opportunity to, ask the questions of why are you putting in a plan? Do you have disabled lives? Do you have high-cost drug claims? Like, there's a lot you're going out to your clients asking to try and find the right fit. And you've identified, everything from drug caps to formularies to, hybrid plans and things like that as different solutions. You do your fact finding or field underwriting to get all that information. So we're trying to make sure that this is not a dumping ground for bad claims. We want it to be sustainable long term, and we want the best advisors that are benefit specialists or getting there that have access to the tools and the field underwriting skills to make sure that this is a sustainable long-term product. And again, it's why you should deal with a benefit specialist so that you've got continuity in your coverage and stability in your pricing.
Yeah, you don't have somebody just out there running around shopping plans for the best price every day, right? And
correct. And this plan is so unlike anybody else's. I mean, there's maybe one or two that have existed over the years in Canada, but you're not going to be on a spreadsheet with this. This is custom made for your client, and you can tweak the the life, the living benefits, the LTD, critical illness, whatever you want to add to it. But you can kind of really dial it in, so it's perfect for each client. And within a client group, as you know, and your clients probably do, you can set up classes as well. So you could say, hey, let's do the same life, disability, and catastrophic health coverage, but we could do $1,000 health spending account for new employees. Long-term employees get $2,000, managers get $3,000, executives get $5,000, and really tailor the plan to what the client is looking for and what they want to offer and what their promise is going to be around their benefits.
Right. Well, that's great. I can tell you, Dave, I've already got clients in this plan, so I'm right out there and getting started. I really wanted to get this message out to people to let them know that we do have this product. I want to thank you for everything you do in the industry, because nobody provides the education and just the assistance. I mean, if I have a question, I'm either going on Slack, as Dave already mentioned, or Dave gets the odd message from me just with a question, and it's really appreciated, I know, by a lot of the advisors out here, and I just thank you so much for coming on the podcast with us.
No problem, and thank you for being a part of the group. By being a CGIB member, as was alluded to at the beginning, there really is about 5,000 years of experience you can tap into. So I just am a little bit of a hub in trying to connect people and solutions, and our Slack channel is a great communicator where Lorne can just jump on in the middle of the night and post a question, and somebody in BC or Atlanta, Canada, or whatever, you might be watching and answer usually pretty quickly. And so It just gives you access to areas. I'm not, and maybe you're not an expert in BC pharmacare, but in a minute you can be talking to somebody who is. So that tool in itself and the resource that you have at your fingertips, that in itself makes you a much better advisor and gives way more value add to your clients as well. So thank you for being a member.
Oh, hey, it's worth every penny, believe me. And, as much as we're all specialists, we still all run into different situations that we've never seen before. I don't care if you're 100 years in the business. You can't know everything. That's why that resource is so important. So
Absolutely.
All right.
Gentlemen, this has been a fantastic podcast. Dave, thank you so much for being on the show. Lorne, I don't know. I just sat back and listened. I mean, it was great information, great stuff. But I also saw a theme very, very early on. I grew up on the coast. I did a lot of sailing, Dave. And so I know that as someone who sails, you're always cutting a new path. You're always going someplace different because of the fact that the wind does what the wind does, right? And you just adjust to that. But you're blazing a trail. And then talking about the live bands that you have on your lawn, to kind of give them some exposure when they normally wouldn't be. Again, there's another hint to the fact that you're a trailblazer. And then, of course, CGIB, again. So I got a really good glimpse of your personality and obviously why Lorne brought you on the show. So thank you so much for being here.
It's the sailor part that does it, right?
Exactly. Yeah.
Hey, we have a line in sailing, and I think it's stolen from the British military. Prior proper planning prevents piss poor performance. And whether it's in sailing and planning for bad weather or planning for every eventuality, or whether it's Lorne creating a group insurance plan for his clients, plan properly in advance, and you end up with a great outcome at the end. So all the things have that in common as well. So thank you.
Absolutely. So again, thank you so much for being on the show. Lorne, people are listening to this going, wait a second, I'd really like to learn more what Lorne can do for my small business. Let's give them your contact information again.
Okay, I'll start with the website, Eric. Actually, by the time this podcast comes out, we will have revamped a bunch of our website, and all the podcasts are on there. There's going to be new blogs coming on. You can get to the YouTube channel through there. So it's curryfinancialgroup.com. That's Curry with a Y, Curry. And of course, you can always email me, Lorne@curryfinancialgroup.com. Or if you need an immediate answer, just pick the phone up. Here, the toll-free number is 1-866-445-4424. Happy to answer any questions, obviously, of anything. But, today's topic, I think there should be some real interest in this new program.
Yeah, absolutely. And whether you're a first-time listener or a long-time listener, go check out the new website. It's going to be pretty amazing. A ton of content up there. Lorne's worked his tail off in getting that ready and set for everybody so that you have easier access to the information that you need to know. So again, Dave, thank you so much for being on the show. Lorne, thank you so much for putting the show on and educating the audience. And of course, our last thank you always goes to you, the listening audience. Thank you so much for tuning in and listening to the Benefits of Knowledge podcast with Lorne Curry. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Lorne comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues. Again, thank you so much for listening today. For everyone at Curry Financial Group, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Benefits of Knowledge podcast. Click the subscribe button below to be notified when new episodes become available.